Welcome to the Independence by Design podcast, where we discuss what it means to be a business owner and ways to get unstuck from the day-to-day so we can design a business that gives us a life of independence. What's up, everybody, and welcome back. I've got my friend Walker Deibel on the show today. If you're not familiar with Walker, he is the author of the book Buy Then Build, and that book set the entire acquisition entrepreneur space into motion years ago when he released it. Walker and I are going to catch up on what he's seen in the marketplace since he released the book. We're going to talk about what he's been up to as he just raised his own fund and how he's been managing the acquisition lab, where he's had 900 acquisition entrepreneurs go through his training program. So we're going to be talking about what he's been seeing in the marketplace, what I've been doing, and then how both of our experiences reconcile. We have a lot of bantering back and forth, and I absolutely have a ton of fun talking to Walker. We're going to continue trying to do more of these on a regular basis. If you want to check out the previous episodes I've done with Walker, where we get into more specifics of the acquisition entrepreneur, you can check out the show notes below where I've got the links to the past episodes. And then depending on where you're listening to this episode, the Spotify channel now also has the videos embedded into those episodes and the chapters, kind of like YouTube. So pretty cool that Spotify's now got the videos in it. Otherwise, you can go check out YouTube. And as always, if you are willing to leave a review for the show on the player you're listening to, I would be forever grateful. Thanks everybody for tuning in, and I really hope you enjoy this episode with Walker. What's up, Superman?
Ryan, how we doing?
Assume the outfit.
Yeah, exactly. The uniform. Let me just check. Is this mic on? Is this one going?
It seems hot. Hot. You're good.
Sorry, I'm sliding into home plate here.
It's okay.
I scheduled last minute, as you know, and then all of a sudden, as we rolled into it, I was like, "Oh, there's a lot going on today." But you're like, "Let's reschedule." I'm like, "No, let's do it."
We're doing it. We're doing it. And I was sitting there as we were waiting, just checking the price of Bitcoin, so I could it's like get over $100,000.
It's not going to go over $100,000 for like months. I mean,
because of all the opposite positions of that is wild. Like in the options market,
what is it doing?
It's just hovering at 99,500.
Yeah, it's too mental. Like people just won't do it. They won't like if it hits 100,000, like people are going to be like, I don't know, and they're going to sell. Like it's just it's too, they're not like I'm going to wait till it's 101. They just don't.
So you just got done wiring, closing a deal too. So how much you still working at Quiet Light?
I have like one deal with them right now. I'm talking with another potential seller. I talk to potential sellers here and there. I work with Quiet Light a little bit. And it wasn't like it was 100% intentional or anything like that, Ryan. It was just sort of, there's kind of my world, right? And the Walker Deibel world is like, buy then build, acquisition lab, now I've got a private equity firm, like all of these things that sort of are a flywheel around my
just exposure, right? In your mission.
Yeah, it's like my YouTube channel, it's just sort of like, I write on LinkedIn or whatever. And it's like, and then and I talk about, we could look at the risk of sounding egotistical, we could pretend that I didn't open this whole like SMB acquisition space, but with all due respect to everybody out there, I did. I was the first one.
Own that shit, dude.
Well, it took me like 10 years of being like, why is no one talking about this? And why does no one understand this? And then 4.5 years to write the thing. And after, after investing like 10 times my personal net worth and personally guaranteed debt, like multiple times over, and then just being like, okay, I need to tell everyone what's going on because they're playing in this little sandbox around startups trying to get like $1 in revenue. And I'm like, yo, dude, I'm just like acquiring it, And so the point is, right, is that, your question was, how much am I working with Quiet Light? I'm still active. I still like to keep the saw sharp. But the truth is that like I talked to, I got 2 texts today from people like, oh, hey, I want to buy a business. Will you talk to me for a minute? Or like, whatever, happy to pay you, all this stuff. But I talked to a seller and it's just a different audience. And they're just like, why should I pick you instead of any other broker? And I'm like, I don't know. I mean, I've done 100 deals. Like I've got all those certifications, like all this stuff. I bought companies, but I don't tell them because if they, it's like, and then when they engage me on the sell side, when we go to market and we start talking to buyers, they all of a sudden are like, oh my God, like I'm working
Yeah,
with
Walker's
all these
representing you.
people, like all these people know my guy, but like I don't, you can't say that to someone who's thinking about, because we get on the call with the seller and they're like, Walker, I read your book, it's what got me in the space, like, right?
Mhm.
You know how it goes. It's
Well,
like,
and what I want, I totally can 100% see the flywheel, Walker, and how all of those things connect. And because like you and I have, however long we've known each other now, I mean, like I'd say we're talking to the same people, how we've chosen to monetize it and what our ongoing mission and how we're threading all of those dots are different. And so like what do you think like is the universal, because like the universal threading of all of those connections for you, like whether it's the private equity firm, whether it's the book, like what's the mission, like how, like, because here let me see if I can say it clearly. I believe that you probably wake up and you feel like you're doing the same activity. It's just, am I talking to this person, that person, this person, that person? But like, what would you say is the common undertone or undercurrent
yeah,
mission of all that?
yeah, I think that my career mission is to work on really cool projects with great people and stack cash. And yeah, right. But the thing is, like, I had this sort of like, I don't know, vision or whatever in like as an undergrad, right? Like as an undergrad, I was English lit and religious studies, Ryan. But I had this sort of this weird thing where I was like,
I don't
like,
know if I knew you were religious studies too, because I knew you had I know you got the acting background.
well, yeah, we can talk about that. But it's one of these where oh, so religious studies. Sorry, now you're going on the tangent.
Did I tell you that I was a theology minor?
No, but did you know? And a lot of people don't know this. A lot of people don't understand that religious studies is not theology, right? Like theology is like what religion?
It's Catholicism, but
Yeah.
it's also, and I'm not Catholic either, but yeah,
Oh, there you
it's
go.
the study of the Catholic denomination.
Correct. And religious studies, on the other hand, is like the academic study of like
Religion.
what do we know of religion?
Yeah.
It's like
Is that
okay,
Diana? Okay, this is way digression, but that Diana Proska or whatever, she's been all over about the UAPs and like she wrote American Cosmos and stuff. She's in a religious study, I think.
cool. I'd never heard of her, but that doesn't mean anything.
That's a whole different.
That doesn't mean
That
anything.
is a different passion of mine of like, why are we here? It kind of threads the
Mhm.
needle of like, why are we here? Anyways, I digress. Continue.
There's some weird analogy to the fact that like the first paragraph of Genesis is written in 3 different languages and just sort of like stuffed together into one paragraph by somebody centuries later in order to somehow make sense and translate it. It's like literally different words for God 3 different times, but whatever. Okay. So the point is I had this sort of vision of I don't know how to do it, but like how do you take the private capital markets and like make them public, right? Because it's like there was the publicly traded companies and everything. My first job out of college was a stockbroker, by the way. Like
Oh, nice. I
obvious
didn't know.
transition, English major, yeah, stockbroker, right? But
I have my securities license too, of
that's what
course.
I did. That's immediately, yeah. So I jokingly said I worked in profits. Ding. But so it's one of these where it was just sort of like I looked at my dad who's a business owner. Buy then build it's dedicated to my grandfather. It's Bob Deibel, your grandfather's entrepreneur, because he bought he bought he bought his dad's feed company, sold it, and then bought a like aluminum filter company. He acquired businesses and he would take me out for pancakes or whatever breakfast I would get. And then, and he would be like, he would just kind of mini lecture me. Like the only way to make any real money is to own your own business. Don't start anything from scratch. Like you got to buy a going concern. And like, I would just get these like one-off treatments on like Saturday morning or whatever as like a tween, you know, my dad would tell stories where he'd be in the house as a kid and his dad would come home, from work and, have like the martini sitting there or whatever. And he'd be like, he had 3 sons, and he was like, "Boys, get down here." Former naval officer, and he'd be like, "Line up." And they'd all line up by age, and he'd be like, "Don't ever go into the retail business. That's all for tonight." Meaning like, as you were.
I have an epiphany. Here it is. That's
So
awesome.
what's the point? The point was I had this kind of exposure to like all these small business owners that weren't the entrepreneurs that were sort of being, on the cover of magazines. I'm like, well, my grandfather's like working really hard. You and I joke that we sell hard work, but it's like I can see he's working really hard, and he is sort of like, I'll just say financially, without a doubt, a level above like most people. You know, but he wasn't, he wasn't some like real estate mogul. He wasn't whatever. But he was a multimillionaire, and
Like the upper middle class, not like uber wealthy or
totally,
something like that.
totally,
Yep.
yeah,
Yep.
yeah, and just like millionaire next door style,
Hmm.
like saved his money, cut the grass himself, like all the things, and what's the point? The point is I had this vision of how do we make the private markets public? Like you can't just like I bought a book printing company. You can't just like buy pieces of a private book printing company
Hmm.
randomly. You have to buy the whole
Hmm.
thing, right?
Hmm.
I'm not suggesting that's where this is all going.
Well, I mean, it's fascinating. We don't have to dive into it right now, but like I just got done watching. I mean, I've watched almost every hour of Michael Saylor that he's put out in the last 18 months, and like he's talking about how antiquated the public markets are, and like you and I, like, does this resonate with you, Walker? Because it is like my mission and my entire belief about this world is like we as value creators who do hard shit and wake up and create value should be able to create equity however we're spending our time. And we need to generate cash flow and equity however we're spending our time. We need to save it and keep it, but the printing impacts that for a different conversation. But like you have all of these assets that are in the lower market that are just completely inaccessible unless you want to raise freaking Nvidia stock. And it's like, it's like how many people can actually have that cash flow? I mean, like it's
Yeah,
just there's too many claims on that cash flow. It's just ridiculous.
yeah. This is a big realization I had. I think one of the big, like writing buy then build. Um, I was an author. That like there wasn't like I make my money in my businesses, in my deals. Like I don't make money selling copies of books out of the
I
back
don't
of.
have a signed book, by the way. That's a bunch of bullshit. I've got one, but like,
Let's get that done. Yeah, but so it's I'm not like selling books out of the back of my trunk or like going on some big tour. Like I would sort of talk. It started with like the academic institutions would reach out, right? And I was like, great, like MBA students want to learn about buying businesses. Let's go. And then pretty quickly it was sort of like entrepreneurs were wanting to learn about it. I'm like, yeah, this is the right balance. Like walking this line is correct. But now it's sort of like I don't like my job at Starbucks, and I'm on social media being told to like bounce and buy a business, and I'm just like, that's hard. But so for me, it was always like make money in the deal and what you're doing. Don't make money like at doing this. And now I'm flipping the script, so to speak, and selling out and just telling everyone to buy a business. I'm just kidding. But the point is, yeah, right, right. The point is like they were never aligned, right? And so your question was about like, how much am I
yeah.
working with Quiet Light? And there was this sort of like misalignment where the flywheel around everything else I was doing, I was sort of spending a lot of time over here.
Mm-hmm.
And for me, Ryan, the thing is like, can I dive into this real quick? Like how
Yeah, I absolutely. Because I'm,
okay,
and this is for everybody listening too, because I like, as you're laying this groundwork, Walker, I've got very specific questions with my clients on like the size, the deal structure, who the hell are these people, who's a good fit, because like you and I have talked for 6 years now or 7 years since we've known each other. Like I'm on the other side than you of the same exact problem. And we're trying to make a more efficient market for the right reasons, not all the other bullshit. So you go as far and wherever you want to go, I'll keep us in because I know exactly where I want to go with this.
all right, cool. I will say, Ryan, before we dive in, I have known you for 6 or 7 years. I want to say two things. One, it's been the best 6 or 7 years of my life.
Of
And
course.
and
You
two,
always do that.
and two, your arms haven't actually gotten any bigger. They've just sort of stayed exactly the same Hulk form.
Uh, you know what? Like
They were huge
you,
when I met you, and they're huge now, but they haven't actually like atrophied nor like Schwarzeneggered out. They're
I do
just
the same thing every day, and you know what? There's something of you. If everybody were to see our text strings back and forth, like my love language is at words of affirmation. So like, I don't know, dude. Like, I'm not gay, but I'll tell you what. Like, it's like I mean, it's so funny because I just read these texts and I like reach out and yeah. Anyways, so
who are you looking at?
yeah, the conversation's yours because of all those affirmations.
Nice. So here's where I'm going with this. Is like people were like, "Hey, Walker, and, they'll ask me questions that obviously I'd thought about, right? Like just sort of like obvious things, like, "Hey, I can't help but notice, that you have like 900, vetted, active, armed with cash, business buyers in Acquisition Lab that like you've worked with to help buy these companies. Why aren't you investing in these businesses?" Right? Like it's an obvious question. And for me, it's the wrong vehicle. Like buying small businesses is 100% entrepreneur centric, and that's what makes it so beautiful. And then so it's like we take no kickbacks, we take, no referral fees, we take no anything. It's just clean. Like it's 100%, you join our community and there's a one-time fee for life and you're in and like that's it, right? But when you go buy a business, like, people will say like, Walker, like what are you buying? Like, can I invest with you? And I'm like, no, that's my deal. And they're like, well, I'm buying a business like you told me to. Like, do you want to invest in my deal? And I'm like, no, that's your deal. Right? You know what I'm saying? And like the thing is like, um, you and I don't sugarcoat it. Like, like working in a business is it's challenging. It challenges you. Every entrepreneur I know is like, I would never have done this if I'd known how hard it is. But like now that I've done it, I never can go back because I know what I can do. You know what I mean? It's like it challenges you.
Yeah,
And
yeah.
there's no way to really get, and I feel like people who've never bought a company before and like they're buying one, they're worried about the wrong things. It's sort of like I don't want to oversimplify it, but it's like don't stop trying to squeeze the risk out of the deal. That's not where it is. It's sort of like jump in the pool and prove to yourself that you can do it.
Yeah, like I mean, I have my twin daughters just turned 8 a couple days ago.
Wow. Yeah.
I did not pass any tests for them to be allowed to come home with me, and I had no idea what I was doing. And it's like, you
Yeah,
can sit
right.
there and think about all of the things that you want your life to be like with kids, and then insert Mike Tyson's quote of you all have a plan until you get punched in the face, and having a kid or having a business is getting punched in the face repeatedly because you chose that path.
That's right. That's right. And it's like you're like, my first online course was 6 months to CEO, and I built it for no other reason than I was like, okay, I don't have anything to sell these people. Like they're reading a book and they're like, what can I buy? Like I just need something else to buy, Walker. So like I made this course. But the truth is like that was like version 1 of what's now the master class or whatever. But like the truth is like you are CEO right away, but it doesn't mean that you can necessarily fast forward your entire career, right? Like it's like you're changing lanes and you're in a lane that I don't know, the speed limit is a lot higher, and there's a lot less traffic and it's way more engaging but you will take work home with you. You will, if you don't, you're you're not paying attention. You know what I mean? It's like you're losing sleep, you're gonna have all the challenges, like all the things. You have to make the decisions and figure out what's going on, right? What's the point? The point is like, if I have 900 people and let's just hypothetically I put, 25 grand and 100 deals. Now all of a sudden I have 100 people who I've invested in, so they clearly have my cell phone number, and like, when their key man quits or whatever, they're gonna call me. Not to mention I have 100 K1s for 25K.
That
Yeah,
alone is not
like,
worth it.
how does that so think about a private equity fund. It's like you want 12 to 24 companies, usually in one sort of thing, right? So it's not the right vehicle, right? But everyone is always like, what do we invest in? And so I've been doing what I call fractional acquisitions, for what year is it? For about 11 years, where I've started investing in like, okay, I'm not in that space, but this is like the world-class team. They've got the edge. I like the business model. I like how I get paid back. I like this sort of calculated risk, risk adjusted returns and all the rest of it. Let's place a bet here. And the way that it's changed for me, in other words, how I've decided to align what
Your
I'm
flywheel. Yeah, your time, how you're lining your
correct,
flywheel. Yep.
sort of like instead of like investing, 25 or 100K of my own money in, Sarah's business over here, who's buying a, whatever,
Painting business or whatever.
whatever it is. So like instead of doing that, okay, why don't I just find, middle market deals that none of us can buy ourselves. And this is where I've been investing anyway, right? Which is sort of like,
Mhm.
so private capital markets, you're looking for supply demand imbalances. You find the teams that are doing it, but much bigger deals with a bigger growth in front of them, right? It,
Aren't you like, and maybe can you put some guardrails around like EBITDA or cash flow size? Because like, are you starting to run into like other PE firms that can't deploy their capital because like what
it's
market?
not it's not that yet, right? So my private equity firm is not as you would imagine it is at this point. So what I built something called the concept vehicle called the wealth stack. Okay. And the wealth stack is, at the very foundation is like you're either in the game or you're not. Like you need to own a business or whatever. Like you need to, maybe you just have some really high paying job and you just want to like increase your passive role. Okay. As you and I have discussed many times, buying a business is not passive whatsoever, but it is like the foundation. And like part of what really annoys me, especially on, X is sort of like the holdco craze. Like, okay,
Oh
like
my God. You and
Walker.
I have been talking about how much bullshit that is. And like, I have specifically had people come on my calendar after listening to my podcast. And it's like, dude, honest to God, real story. Dude, Ryan, I was listening to all these people on X, had Walker's book. So you're implicated in this. And then he goes, and I was listening to your podcast and I was like, oh shit. He bought this business. He left a $350,000 IT job, bought an HVAC business in 2021, high price, the highest valuation probably. Supply chain gets all effed up. Inflation, so the working capital needs went from like $400 to $800,000, 25% increase in salary costs. He's like, I haven't paid myself since I bought this thing, and I'm barely hanging on. And I'm like, because it's not easy, dude.
Yeah.
Like,
Yeah.
oh, it's not passive, and it's not some like, I don't know, man. So you and I have been aligned on telling the truth the whole time, and it's just rough to watch that.
Right. But we also can't ignore that the private markets have outsized returns. They just do because of the supply demand imbalance and the inefficiency of it, right? And so just becoming like I had access before, but then like after I became an author, like my access to different deals like went into overdrive, and it was sort of like, okay, so I don't have some like investment thesis where we've, picked a vertical and we're doing like normal private equity, like let's acquire all these in here. That might happen. Instead, what I'm doing is I'm syndicating, okay, around specific deals. So like
You're
right
using
now,
like special purpose vehicles for those.
that's what I'm doing right now. Yeah.
Okay, got
And I'm
it.
negotiating better deals for our investors than you can even get directly. Right. And then I'm turning around to our community and audience and whatever and saying like, yo, I'm investing in this. Like, do you want to come with me? And then this year alone, I started in February. So like what month is it? So like 10 or 11, 10 months in, I've raised about like $17.5 million just things I'm investing in, right? So this is uh, private equity, private real estate, and next is private credit, right? So for me, it's more like how do I amp up the things that I'm doing at scale with the things that I've built that still resonate and build on top of sort of like buy then build thesis, right? So that's how I've chosen to kind of align what I'm like what I'm doing like with like the economic engine, right? And
I
so
love it. I
concept
love
is
it.
the concept is I haven't started like an overall fund yet. I might in the next 24 to 36 months. I'm not in a hurry. What I'm trying to do is build a menu of private market investments that people can choose to invest in based on, am I more patient and I want higher appreciation?
I
Do
love, I
do I
love that, dude.
do I want like 12 to 14% cash flow that's like, with real estate backed like loans, like, underwritten by the banker or whatever. And I'm just and I've got personally I'm invested in all kinds of stuff. And so it's one of these where it's because of the Jobs Act, I'm now able to share these things. And so what I'm trying to do is now, in the same way Buy Then Build sort of brought this niche of the private markets to entrepreneurs, I'm now trying to bring this other section, this middle market, to entrepreneurs in the same way,
Yep.
so
Yep.
they build
I
their
mean,
portfolio outside of the stock market. That
I
sort
mean,
of
you're capital matching and making it more efficient. I mean, is that a fair? I mean, like at the end of the day, that's what you're doing. You're capital matching to risk versus return. Where's the capital? Who's got the investments? And I think that you and I, like ever since I met you, like you and I both share that same mission of like, okay, like how do we as hard work value creators, get the return? But then like when you start realizing it, well, access to capital is hard. Well, yeah, I could create value, but then how do I like monetize that value? And how do I get it to match all this up? And it's like, I think you and I both realized at an earlier stage, we're like, education is the number one issue, I think, for fueling the efficiencies, because like how in the God's name are we supposed to trade an asset back and forth if we have no effing clue how and what creates value? And then like once you realize that how and what creates value, then it's like, then we stack on what are the vehicles, special purpose vehicles. You got different types of equity, different types of debt. But at the end of the day, Walker would like to sell his business to Ryan. Okay, how do we do that? What's agreed upon in value? So like, I think that's, and I'm super excited because to keep chatting, because you and I, since day one, I've realized like, and this has been the hardest thing for me, man, is because I'm speaking, doing workshops, doing the podcast, worked, had a couple starts and stops with the book, but like in a couple different iterations of this, but like it's been the same avenue and alley. I haven't gone over to PE. I haven't gone over to brokering or any of that stuff. I'm like, I'm going to fix and figure out this effing problem. And
You've gone deep, man. You're doing a great job. I mean, not that you need me to tell you that, but it's like you went
shut
like,
up.
no, I'm not
Here you
kidding.
are.
I'm not
just
kidding.
kidding.
I
I'm kidding.
don't
I'm
mean to
kidding.
interrupt you. Like, what's that movie with Leo DiCaprio, Inception, where he goes like 3, 4 layers
Yeah.
deep? Like, I feel like you're down here, like re-engineering below the foundation of where most people stop. Like that's where you
Oh,
operate.
well, you know what? And it was not an empty affirmation. So I appreciate that. And and what I want to show you this, Walker, because I want it, and actually that's very fascinating because I think that's exactly what I'm going to show you here, because I want to show you of the ownership mindset. And the only reason I'm bring this up is because I think you are living this already. I have articulated what I was already doing. And then like, this is what all my clients want. And what we're doing is we're trying to match all of these equations together. So let me show you this for a sec, because I created this inside the ownership mindset of the material. What we have here is this, I call it the ownership mindset, Walker. And so the people listening in, I'll explain it. Otherwise, you can go to the YouTube channel. But there's this triangle, and we start with time. And I say, okay, like, cause like at the end of the day, Walker, I've got like over there that, my week in my life in weeks. At the end of the day, you and I are here. I'm hopefully going to live to 90 some years old in my meat suit, and then I drop dead. And time is, it's just it, right? So like we have our meat suit for 90 years, and we have our time as the actual most precious constraint that we have. And we have that time. And what we need to do is generate cash flow that is over time decoupled from our labor, right? And then as we generate cash flow that's decoupled from our labor, we need to invest that into equity and into assets that generate wealth, so that way we can then generate more freedom over our time. And this is that circle that you were talking about. And then I expand it more to say, like, what the F does this mean? And how do we actually like double click on this and figure out what do we want to do? Well, I personally just want to do whatever I want every day. So, and that's all my clients. I want to control over my calendar. I want to work with the people I want to work with. And I want to have my identity that I feel like is my bigger purpose. Then with the cash flow, we have W-2 ownership distributions and then other things. And then we've got then wealth, which is equity in our business, savings and investments, and then real estate. But my point is, like, when I look at this, Walker, like, no, stop sharing here, is that's what I'm doing. That's what you're doing. And at the end of the day, like, I have realized, but back to the first principle, how many times did I zero in? It's like you might or me might say, I want this. I want to own a business and I want to do this and I want to do that. And I always joke around. I'm like, all these people on X sound like that gal from Charlie and the Chocolate Factory. I want it now. I want my passive. I want my CEO job while doing nothing, while sitting on the beach, while I had this perfect. It's like, come on. Like life is hard work and we have time and we need to generate cash flow and have sustainable cash flow over time, slowly decoupled from our labor while putting that into equity. And you and I have both determined that business in the lower to middle market is a wonderful way to have a disproportionate outsized return on your time.
Yes, correct.
Is that, what do you think about all this?
Very well said. Yes. Keep
And
going.
you're threading the needle where you're making your time and from your time, your cash flow and your wealth is from syndicating deals, getting investments, but also acquisition lab and speaking. But like your time is more efficient because of all the people are the same kind of people that you're talking to and all this stuff. Is that a fair way of putting it?
No, that's great. That's great. Look at your model. Like you and I don't need to talk for very long for me to share that I have something very, very similar. You know what I mean? Like, yeah, of course. But I think that with the private equity effort, the concept here is sort of like, look, if you think that you're going to go buy a business and then you're going to hurry up and go out and buy like 17 more this quarter, okay? Okay. Look, instead of like, why don't you buy one and focus on one? You know, if you're gonna go vertical, great. Maybe go slow, buy another one, like whatever, get your arms around it. But like instead of buying these other 15 companies, like why don't you diversify into the private markets with like the deals that I'm doing, for example? So it's like so
Some
it's
active, some pass, or kind of pass.
correct.
Like you're in the
Go
same
under each
space.
other and like it's like the private markets is where the outsized gains are made. Period. So it's like because of that, how can we diversify in the like concentration builds wealth and diversification, breeds safety, right? In that or preservation. So it's sort of like, if I diversify, if I buy like let's just use real estate as an example. If I buy, one building and I'm just like all in and Buffett says put all your eggs in one basket and watch that basket like a hawk. Footnote, that's not what he did. But anyway, it's
And
not
footnote, he's got too much in cash and he's eroding shareholder value every day.
well, but the thing is like if you do that, you've got everything in that one business or that one building, right? But if you diversify in that space, well, now you can leverage other people's time and other people's expertise and other people's edge in the markets and all the other things and say like, okay, well, now I have, these other, I have mine, but then I have another 11 of these other things and I'm getting, between, whatever, pick your number, 18 and 27% internal rate of return. Some of them are paying cash, some of them aren't. So, the private capital markets are great because you have the world's best returns, but you also have much more significant losses when they occur.
Right. Yeah. It's
So
hard. Well, the reason you get the return is because of the risk. I mean, it's
that's
just
right. That's right. And so I think a lot of what I'm seeing right now is a lot of like real estate syndicators are like, oh my God, I'm buying businesses. Let's go buy businesses now. And they've been doing it for, 6 months. Or they're trying to do their first one. And I'm just sort of looking at it and I'm like, okay, I feel like what you're seeing here is like a 33% cap rate. But running a business and scaling, your multifamily acquisitions are very, very different asset classes.
yeah, maybe the real estate industry should focus on actually delivering the rate of returns and having the comps and the run and the models the way they should be run, specifically commercial real estate. I mean, and I've seen the same thing in private equity. Can't find deals at a good price because everybody's bidding up the price. So then they get into real estate. I'm like, your investors literally gave you money for private equity, not for real estate. I mean, there's just erosion. Back to I think your whole point is there's this erosion of return and value everywhere that's underpinned by the Fed printing. But outside of that, it's distorted all this stuff where you're then seeing different people get into different lanes. I mean, isn't it wild? Like what people are doing. And like, don't you think that would just come with so much stress of knowing that you're just like creeping out of your lane and you're going to be found out at some point?
Well, yeah, I mean, look, mutual fund managers have been doing it for years, right? It's like you can't have your mutual fund going down. So, if you're running, growth mid market, and they're over there, and what's happening is, like large cap tech is, you scope creep out, right? So, you actually just wait for the guy across the hall to go to lunch, and you go in and look at what he's buying. That's like what they do. And that's kind of why I'm creating this menu, so to
Yeah,
speak,
yeah, I
right?
like it.
Like, yeah, and and so the point here, I think that I failed to land is sort of like by leveraging, the community that we've built. Okay, we're now writing checks that are like combined. They're $50 to $500,000 checks are my investor group, right? And then, but we're investing at multiple millions of dollars in the deals, and so it's sort of like we've become united, the family office.
I love it. I love it's like the diversified Reddit hedge fund.
That's it. And so I go in and I'm like, look, and like we're just picking up momentum. Like I'm feeling, really good about what my track record is going to look like in a year. Cause like obviously I've got my track record in, managing private businesses. I don't know that it 100% carries over or applies to what I'm doing now. And so like leveraging these other great
What
teams.
are your concerns? Just curious. Like, is it because of a little bit more hands off, or like, what
Well,
do you?
because like at the beginning, when you buy these small businesses, like you take all the risk. Right? Like, like if I brought on a board of directors, they didn't have any control over me. I just paid them $1,000 for coming in every quarter, and giving me their brain, but like it's not like I had people. I never had investors that were like I
Yeah,
had
they're
people.
bosses. Right? They're
Right.
bosses with a. I mean, whether they completely tell you no or not, but they've got chirping voices. Money comes with a personality, regardless.
So, yeah, so I've jumped in the Coliseum and with like $100 and turned it into multiple millions for myself. But I've never been like, here, you guys give me millions of dollars and let me go turn that into a bunch of cash and give it back to you, right? Like with proper reporting and all the things. So, in other words, I think that this is a very applicable next step, especially because it's what I've been doing in the background for 10 years. But and I've made mistakes along the way, and I like I mean, you and I both, I think we spent a lot of time getting it right before we. So now I'm sort of picking my jockeys and saying like, okay, let's go. And so I think that what's happening now is other people are seeing what I'm doing, and now even more deals are coming to me, and I'm getting even better uh
The
deal.
fly was, yeah, yeah, yep. Fly was
And
going.
what I'm telling them is like, look, there's no like institutional person coming in, right? There's no like, we're not trying to, slap some kind of like weird pref thing on top of, whatever. Like, but I need to get my terms, right? And so I'm working my terms and I'm saying, I'm going to turn around and we're going to pull this together and we're going to get these smaller checks, and you're going to have, we're going to have shareholders. We're not going to have like some huge institutional investor that comes in.
Are you going to structure it kind of like a Berkshire, or like are you going to have like a C corp with like, or is every deal different, like on how the
every,
caps?
every deal is different. Like I'm just building, like I'm like we're wrapping up the third deal right now, and it's one of these where appetite still seems to be really strong. Like we're but I have I mean, the thing is like I'll share, I already have my fourth, fifth, and sixth deal all teed up, and like we're in diligence and all the rest of it. And more people are coming to me and they're like, hey, and I'm like, wow, that's a good deal, but like I don't have space in Q1 anymore.
Yep. Well, let's
So
let's
like,
talk about why I think what you're doing is so damn important, and
hmm,
like, and let's preface it with like.
I like how you think.
Well, you giving me too much validate or affirmation, man. I gotta dish it back. Um, the dysfunction in the lower market is ridiculous. So I want to give me a couple minutes. I want to frame up this problem because I think it's pretty universal with my clients. And so, because I want to lay the groundwork, Walker, to say, okay, here's what I'm seeing. Here are my typical clients. Here's a typical kind of structure of their current situation and what we're running into from dead ends. Because I'm on the other side, right? I'm not dealing with the buyers. I'm dealing with, so I'll explain my clientele, the problem that we see, and then like how your fund, but then also your community is playing a huge role in making this a more efficient market for matching capital with future buyers and sellers and all that kind of stuff. So my clients are owner operators specifically. They're not in the boardroom and they're not raising money on an idea. They are owner operators that have, and like the owner operator hyphen is important. The operating system is like EOS. I've built out the ownership framework for the hyphened owner operator. These are real people doing real shit for real people that also have real money. So like they're the, I would call it, like whether it's the Cody Sanchez or Alex Ramani or Alex or Hamosi, like these are the clients that they would drool over. And a lot of your clients too. And the reality is though, there's still some like, because of what I see, it is the absolute opposite of how easy everybody's saying it is for not only the buyer, but the seller and the whole value like matching. And then because what happens is, so like, let's say my average client's 1 to 2 million in normalized EBITDA. And within that, I'll pick $1 million in normalized EBITDA and a 5 multiple just to give us something to work with here. But like all of my clients have enough money to mold their investments like in the business, but there are distributions or taxes, but there's enough there to kind of go, what should I do with this? And so what I'm seeing is these owner operators, like what I'm working with them, Walker, is like, okay, like once you understand that triangle I went through, like the first thing where like everybody is coming at me like, I want to free up my time. I'm sick and tired. Like, I don't think anybody wants more L10s. I don't want to set any more L10s. I don't want any more operating meetings. And these are owners that got stuck in the day-to-day and they want to get out. They want to extract themselves out. So it's like, okay, well, if we go to the cash flow dynamic and then the equity dynamic, it's like, okay, well, we have to understand outside of your W-2 income, when can you make your income through distributions? So like, that's the number one thing that I'm helping people focus on is like, okay, if you want 300 to 500 grand in distributions after taxes, you have to build the entire business around that constraint. And then the second part would be, or the third part would be the equity. We have to be tracking and measuring and monitoring the normalized EBITDA and the multiple on the business equity. So EBITDA, multiple, and then net debt. So all that being said, that's the whole framework. And then so these people are coming at this going, they're understanding all this stuff. And so then it's like, okay, well, I have this individual right now, and I've got, it's a half a dozen probably of my clients so I got half that are like probably more our age, other half that are truly transitioning into retirement. Whether they keep the business or not is different. Like it's like, okay, like now that they realize that I could either step out of my job and actually keep my investment, or I could sell the whole job and the investment. But we're at that decision tree, which is where I'm going with this. Is like, okay, we're at this decision tree of, okay, they understand fair value. They understand the discounted cash flow valuation of their business, how like an SBA loan or a bank loan or earnouts versus like we have this whole thing of like Walker, it like potentially is the buyer. We need to take that $5 million valuation and transition that value. How we match that whole capital structure up together and the role of the owner operator is so interesting to me because as I'm watching this, I'm going, okay, this client of mine, $1 million in EBITDA, 5 multiple. She wants $5 million. Okay. For valuation, doesn't need it all up front. Let's say we want 3 million net up front, 3.5. We've now got ability through seller's note or earnout to probably both. Right. And because like what I've been telling people, Walker, is like, hey, on a 120 month SBA loan at 10%, a $5 million valuation, $70K a month in debt. Like if you can't afford that, you can't afford that. And the company ain't worth $5 million. So like, I'm trying to go through this whole situation. Going, okay, well, in this situation, like 4 to 5 of my clients are like, should I hire a $250,000 CEO and keep this company and keep the distributions, which is a really good financial investment, which is why you and I would want the business. But a lot of these people are I've been in this for 30 years. I can't decouple my thoughts from it. So they're like, there's this desire to find someone from your community who is willing to take the $150,000 salary.
Right. And there's something else going on there. I'm sorry, just
sorry. I'm going. No.
There's one other little component going on there, which is, it's sort of like when you build something from scratch, right? Which is, I presume, the majority of your clients. Is that true?
Yeah, I'd say like there's about 20% of them that are acquisition entrepreneurs,
Sure.
actually.
Okay, but they're deeply in, right? It's
Oh
not
yeah, they're
like
all like,
yeah,
yeah,
yeah, yeah, they're
yeah.
in, right? Yeah, like the loan is almost done or whatever. So, like, it's one of these where, like, look, real estate analogies are just so simple. It's sort of like real estate developers that build buildings from scratch. What do? As soon as they stabilize it, they sell it because it's like I just created all this value and I'm going to sell
Hmm.
it, right?
Hmm.
That's the startup entrepreneur. It's like at some point you got to sell it. You can't just be like, I'm also going to be the person that would buy that building,
Yep.
right? And just hang out at 6% interest on this thing. Cause it's like that, whoever is the buyer of that is going to use debt to come in and turn their $100 into a million, or you know what
Yep.
I'm saying?
Yep.
So
Yep.
it's like acquisition entrepreneurship is almost like that second person. It's that person coming in, doing that value add or buying that stabilized building that's already there. But I think that when you are a startup entrepreneur, there is you know that you just made $5 million out of thin air. And you know that it takes effort to, like, I tell people at the lab, I'm like, look, can we just like please stop saying this business just kicks off $1 million every year, because nothing kicks off $1 million every year. There is some 86-year-old Asian woman in the back cranking some steel thing while you're asleep. That's what's happening, right? Like, I mean, someone is back there because like
It's a machine.
the value in business is in the intangibles, right? And so I think that a lot of these business owners know that it's like, if I'm not growing, I'm dying. If I'm wanting to sort of like be um, an absentee owner, then there's no one that can actually replace me, at like $1 million in EBITDA. Like you need to get bigger until you're building a huge sort of like professional management team, right? So you know what
I did the only reason
but like I feel like your point was that they're struggling with this decision, and I think that a big like monkey brain part of that decision is like I just created $5 million out of thin air. Like, shouldn't I take it? And the answer is probably yeah. Unless you're
I disagree. I
cool.
mean, yeah, because like at a half a million, like is so I'll come at from where I'm disagreeing from is
Cool.
return on equity, I believe, has to be 12% right now to avoid debasement and inflation. So we have 8% money supply growth. We have 4% inflation. You have to be growing at 12%. Otherwise, you're literally just keeping your purchasing power. So if we get $4 million out front of fiat money, where are you going to put it? You're going to put it in stock in cash? No. Treasuries that lock in your shit return at 5%? No. PE ratios of the public companies are shit. And where are we going to end up? Right where you are, trying to get outsized returns in the middle market. So
Yeah,
when I
give it to me as well.
yeah,
I'll
exactly.
do some
Like,
deals.
well, and I said, like, like a lot of my clients, they're the hot griller boy at the dance. And
Yeah,
so
right.
you got the cash flow. What the challenge is like, it's the mental monkey mind of I'm out traveling and I'm thinking about payables, receivables, inventory. And I'm like, it's the private equity. I mean, like what I've worked on, Walker, is the owner's playbook to say, okay, we need the 3-statement model, then a phantom stock plan tied to an executive comp plan. We hire the CEO. They then have this with a formal strategic planning process and then implement everything using EOS. So like you can actually truly mentally escape, even though you might be hiking, you still think about the business and because you're hoping that it's revenue and then checking account. My point is we're putting in all these systems so they can mentally decouple themselves. And like I've got like at 3 to 4 clients right now, $260,000 CEO with $100,000 comp plan, short-term bonus tied to working capital, normalized EBITDA and distributions. Then we have a phantom stock plan tied to normalized EBITDA, the multiple and equity valuation within a period of time. Use a 3-statement model to manage that. So all of this is 100% possible. I got clients that have done it and clients that haven't done it. The people that are at this decision tree that is very important of how they determine what to do next is there's 3 people right now. It's like, okay, I hire this executive search firm, 70 to 80K executive search firm fee. They're totally cool with that. It's an add back and it creates value. We hire we hire the next CEO at call it 260. So let's say you're sitting at, that's what, $21,000 a month or something like 22. Okay, great. We have enough cash flow to float the, not to float, but to pay for the 22 grand while I still collect the distributions after taxes. We can see it in the financial model, so we have no concerns. So we absolutely can hire the CEO, put in the comp plan, put in the metrics. Do I do that to keep kicking out? And this is where I think my clients could use, they have 300 to 500K in distributions after taxes while someone's running their company. And that rate of return while keeping the equity outperforms what else they would do as a pure capital allocator with a bunch of fiat dollars. But then they still like, and all that stuff has to be put into place for them to mentally go, I'm fine to leave this. But the interesting part with these 3 to 4 clients right now is if I do that, it takes more time. And I don't know if I want to do that, even though my valuation might be higher. So that my point is they're going back to that triangle of decision making, going time, cash flow, wealth. That would burn some cash flow. It would automatically grow equity, but it might take some time. And so some of these people are like, hey, to make the deal work at the current cash flow, the acquisition entrepreneur who wants a job is the only other person where we could actually cash flow the valuation that they need to make it worth it for the actual sale transition. So there's this like, do I hire the person? And then like, that's just one journey. And then eventually they could then sell to PE, third. I mean, they got a ton of options, ESOP. But over here, it's like, if I don't hire the person, I literally need to find an acquisition entrepreneur who needs the job, who wants the job. But then it becomes the deal structure, Walker, of like bank financing, equity earn. And then it's like, shit, like you can't do all of that work and then only get $1.5 million up front. Cause it's like, fuck it, I'm going to keep the business.
Keep it. Right. Exactly.
So it's this hamster wheel of like indecision.
Well, I think it's interesting when you look at that profile of entrepreneur because they tend to fall in two camps in my experience. And one is like that model of keeping the business and putting operator in place is really strong and the most reliable when you have low to no debt left on your business, right? So for example, when you go out and you buy a SBA loan business with 90% debt, like you should not hire an employee to run the business and peace out to the beach.
Right.
It's
Right. Totally
too
agree with
much.
you. Well, in SBA, I mean, they're 90% leverage. It's like all the equity is gone. Like you have no wiggle
Right.
room.
But like if I owned a business that was like, worth about $5 million, okay, kicking off, $1 million. Then what's going to happen is, as long as there's no debt, like I can take the volatility of a mishire or, my CEO's spouse dying one quarter or, a big customer leaving or like all of the things that sort of happen, like the good days and the bad days.
I
And
agree with you on the wiggle room. The only thing I would say on the debt, like I got clients with millions of dollars of debt, but as long as we can see in the 3-statement forecast, their working capital, their distributions, their taxes, and the debt, and then they know they've not got enough cash. Like it's all about the modeling, but it's not over leveraged like the SBA situation where people have literally not a hair of error. I mean,
yeah,
yeah.
so I guess where I'm going is like if you could give like if you gave me $3.5 million and there's another 1.5 million presumably coming on a transaction, right? My point is there's two different profiles. Some people are going to take that 3.5 million and want to put it like somewhere safe. Okay, like
And
whatever
just,
safe means. Like
yeah,
okay,
right.
here's my like whatever. Other people are going to say, well, here, let me just go get another 3.5 million of debt and start like really continuing to build with like this big cash outlay that I got, right? So I feel like if you are thinking safe, right, then safe and passive, then it's a lot more likely that you're gonna want to keep your business. Whereas if you're a lot more comfortable with new deals and understanding leverage and all the rest of it, I think that
I
you could.
think you're right, but I think the conundrum lies in the fact that what you just described is essentially just 2 age brackets. And those are like literally like both of my clientele. Like I have people more our age, which is, by the way, I understand, Ryan, like the only way to get wealth and cash flow is through business. So I'm here, I get it. And they're not acquisition entrepreneurs. A lot of, like, I bet you a good chunk of them are second generation. Some of them have actually been through the, read your book and then did SBA loan, bought a lock and safe business. But like, it's younger, more aggressive, more risk, willing to eat shit for that return. And like, I might need the liquidity to keep growing that pile. Which therefore, like if you think about it, the reason they would sell is to keep the energy going in the time. The other thing would be is it was literally like it's a good way to appreciate your equity and your cash flow because you can't get the returns anywhere else. But the other people who are technically looking at the safe bucket are more in the retirement category for their time. Therefore, the safe bucket doesn't make any goddamn sense anymore because of the inflation and erosion of cash and treasury. And so, like, literally, we go all the way back to square one of what would you do with your money? Oh, we would find a commercial cleaning company that kicks off a bunch of money that has actually got a good investment and growing equity. I'm just stuck in it right now. And so it's this weird, like once they get extracted out of the operator role and they're literally thinking about capital allocation, they end up back on their own situation. So the challenge is then in order to make it worth it, we're like, hey, you get $4 to $5 million cash at closing. That makes the monetization event worth it. Unless it's $3 or $4 million, it doesn't make any sense to leave this situation. That's the hamster. I call it the $1 million forward multiple hamster wheel, which Walker, which is where I go. Like what you're doing is so important. Is like, what the F is everybody talking about? Like these passive deals. And I'm like, okay, like you have essentially 5.5 million jobs that have good W-2 and K-1s that is unsellable because you can't even finance the buyout at all. And then you have this other chunk where it's like private equity above $2 million that they just, leverage the till to hire a bunch of, consultants to go fix it and run it for them while they sit in their high tower. And then there's you and me that sit between like $500,000 and $2 million in EBITDA going like, this is such an inefficient marketplace where like I have willing sellers, but the valuation and not even the valuation, Walker, it's the bank financing and the deal structure that makes it absolutely not worth it for them to sell. I was hoping you're going to have a different answer.
Yeah, no, I mean, it's good. Like I think that, deciding to sell your business is more than anything a lifestyle decision, right? Like, so it's just like, for the first 30 years of my life, I had no interest in getting married. And then all of a sudden I turned 30 one day and I was like, I need to get married like right now. Like this is a lifestyle decision. And I sort of looked around and I'm like, just kidding. I dated my wife. She's
I was just saying, your wife is a lifestyle decision. Yeah, I'm going to I'm going to make this a clip. And
getting married is a lifestyle decision, right? Like you're like, okay, I want to do this now. Right. And I think that selling your business is exactly the same thing, right? So it's like you're not necessarily doing it because I'm getting a 10x. Like if you can get a 10x, sell your business, right? But like that's not what these companies sell for. So it's just sort of like, do you want to be in it and running it? Do you want to be engineering? Do you want to be running a business or building a corporation kind of a thing, right? That's what you're talking about. It's like let's put so many systems in place that you're building this,
they're working themselves into the owner's box of the private equity mindset. I mean, like they're extracting themselves from their operations to keep the company, but there's a certain amount of back to your time. It takes time to do that. And that's where like the energy, I think it's really comes down to where
it's also a different business, right? Like, I mean, you're there to basically guide them through. I'm sorry to interrupt. I didn't mean to interrupt.
No, go for it.
It's like it's like if I have been building a factory that makes widgets, right, for 20 years. And then all of a sudden you're like, okay, here's what you're going to do. You're going to own the widget factory, but you're not going to go to work. It's like, what? Like them, like, it's like, I just kind of want to sell it then. I mean, a percentage of your people are going to be like, okay, fine. Like on paper, this makes sense. So let's go ahead and do it. And they'll actually be able to grasp that. But I think most people are like, yeah, but like I make cakes. That's what I do. I make cakes.
They're the practitioner, back to the E-myth, right? I mean, like, and like what's fascinating, I would generally agree. And the caveat with, I mean, like I'm topping out at 20 clients. I'm almost there. And like my like phase two of the business is all a content play, like online, the education, all that stuff coming next year. But like, as far as like my clients, I'm only taking people on that are doing that hard work. So like, it doesn't really matter for me what I'm just, as I extrapolate above to say the general marketplace of like, I've had 2,000 people go through my workshops now in the last 2-3 years. And like, so I get a lot of that rapid feedback, just like you do. And I think that's what's fascinating about what we both do is like, we're getting so much discussions. And like, it's like, cause like the only way in the lower market is to get the anecdotal stories from thousands of people over a couple of years to go, what's normal? And so when I say this is that, the people that I'm willing to deal with are the hard workers. But then when I get above that, Walker, I go, this is such an effing disaster for the economy because of how many people are old in their 60s. Like, and I just go back. And so I have this US Census Bureau thing that I always spit off in all my workshops. And like, it's all, have you ever heard this? Have you ever heard me do this before?
I don't recall.
So I'll give you,
I usually zone out when you're talking. I don't.
You, what's that?
I just zone out when you're
Oh,
talking.
perfect. Hopefully you're thinking about something for your next words of affirmation. So there's 6 million privately held companies that have employees. Have you ever heard this whole thing? There's like 27 million entities, but 6 million of them have employees that are privately held. They employ like half of the US. There's only 20,000 over 100 million. They employ 56,000 or 56 million Americans. And then between 5 million and 100 million, there's like 400,000 companies that employ like 35 million Americans or 30. And then below 5 million in revenue is 5.6 million companies or 5.5. And so like what happens is I have done the back of the napkin math mentally and said, okay, well, we all know that they're not all $5 million. They're probably $1 million, but let's say that they're all 5 million with 10% EBITDA. You're now sitting at 500 grand in EBITDA times a 4 puts you at $2 million. Asset sale, line of credit, debt, you're walking away with $1 million, and this person's been used to making 300 grand and they don't have more than 400 grand in their savings. And you just go like, this is like a big problem for everybody because there's not enough cash flow to fund a buyout. They don't have enough savings. They're tired. And maybe I just need to stop worrying about everybody and just focus on the people that are actually willing to do shit about this. But like, I just find it fascinating because I think the acquisition entrepreneur space of people going in there and buying a company or two. And I really don't want to use the word platform, but you're using a foundation of a healthy business infrastructure to then do what you're doing to create, like, there has to be an efficient way to do this transition because there's no $10 trillion baby boomer wealth tsunami. I think it's total bullshit. Like, it's like, these are companies that have jobs and there's not enough cash flow to fund a buyout.
I don't think it's bullshit at all. So,
okay, why?
Well, I mean, look, I mean, you're hitting on all the right points. Like that, like that whole thing is actually, when I gave the keynote at MIT, that's actually exactly what I walked through, was like the numbers that you just walked through, right? And it was sort of like, it's sort of like the future of, private acquisitions is like, is like an iceberg. It's below the water. Like everyone's been operating on the top, but like 50, it's something like 45 to 47% of the entire US economy is owned by baby boomers. And I mean small businesses, right? Like, so we're saying the same thing, but the thing is like, no one's ever said why the federal government came out in the form of the SBA and in 2016 and said, no problem. We'll help you if you have no collateral and the business has no collateral. We'll help you go ahead and buy this company out with 90% debt. As soon as they said that, I was like, oh my God, I bought 3 companies that year. I'd been in the space for.
You think the vehicles are becoming more, got it.
Why are they doing that? It's because 45 to 47% of the US economy needs to change hands. And all these people are going to be making lifestyle decisions or not. But the thing is like they're either going to die with their business, which I hope doesn't happen, right? Or they're going to begin to own them passively. And then they still either die or don't die with the company. Right. I mean, the somewhere, right? Like, so if it's so old economy that it fades out, it's like all those workers are going to, it's the same problem with like why workers are scared of like AI. It's like AI doesn't replace people. It just replaces how we work. And that's
I agree with you there, but the demographic cliff that we have actually like we have a demographic cliff problem. And like we have millennials, which is better than other countries across the world, but like there's less consumers that have less money now. So like back to like we're a consumer Is that
Consumers cashed up, bro. Americans have more money than they've ever had in their lives. Period. In the history of the country.
I don't even know how to tackle that comment. Um, according to what stat, what data, what do you mean by that?
Well, here, I didn't come on the podcast to defend that point. So let's go ahead and
Oh,
roll.
is that you retreating? No, I'm just
No, I'm not. This is what I believe, but like I don't have my data here handy. Like that's not what I was coming to talk about.
fair enough. Well, and like it's so what
Huh?
nominal ways of like like wage increase. I mean, because like we're consumerism, like we have to have someone that has $1 to spend $1, so that way we can make profits after we deliver them goods or services. I mean, like we're a 70% consumer driven economy, and consumers are hurting more than we've ever had. We have the wealth inequality, all that stuff, regardless of what, like I've seen the lack of cash flow in a lot of these companies over years, Walker. My point is the I agree with everything you're saying, and I think what you mentioned is actually very productive in this situation. Is I think if I were to sum up my comment about my case study about my client and what you mentioned, is there are vehicle inefficiencies of debt and equity structures that are not allowing the facilitation of the handoff in a way that makes sense for the buyer and the seller. And then the SBA loans opening it up in interesting ways to make that more
Well,
advantageous, or
here's the other, I think, kind of point that we're not discussing, which is, if a small privately held business is making $1 million a year in EBITDA, right? The it's like, yes, the sort of like market for that business is probably bigger than it was, 10 years ago by a lot. But it's still a thin market, right? And the thing is like buying a company that's doing 1 million in EBITDA and acquiring it for $5 million. I mean, like, I don't, I hesitate to say things in permanence because like nothing is actually true and there's always standard deviation. But that's like a transaction I would never do.
right? No, I'm
Right?
tracking you. Yeah,
It's
because
like it's too much. Like it's like as the buyer, I need to be able to make money, right? And this is kind of what
yep.
you're talking about, which
Well,
is
this is actually what exactly. Let me sorry to interject, but I want to give you the specifics. I said because if you're averaging, it was 40 grand a month in distributions after taxes, and that's not including salary. That was like, I mean, it's true free cash flow. If you took 40 grand and times it by 120 and then did a reverse engineering of like what the debt would have to be, that loan, the SBA loan, it was 3.7 million bucks. And that's if 100% of the distributions went to debt. And that therefore the only cash flows available that's is 125 grand for the salary of the owner operator. And I said to this individual, I said to them, I wouldn't even do it at 3.7.
yeah, exactly. I mean, well, you're closer to the number, but right. Yeah, but the point is like and also the way that a lot of sellers will push back on that is be like, fine, find a cash buyer. And it's like, well, you don't understand how people that have $4 million in cash to spend on a business think, which is I still need the returns as if I was getting it this way, as if I was buying it with debt. It's just that I'm buying it with cash so that my ROI is higher. Sorry. So that my cash flow is higher, but I'm willing to take a lower return on the investment because I don't want to use leverage, right? So it's not really any different. So I think that like on the one hand, we could say that there's a disparity between buyers and sellers in the financing, but at the end of the day, it's also sort of like what are these assets actually worth, right? And it's like
Fair
if
enough, dude. I like how you word that.
well, it's like if sellers want to, like every seller knows one thing, which is their business is worth, like 100x. And it's true. That's the thing. It's true. It's sort of like your 8-year-old daughters are not for sale. Right. I mean, they're like they are priceless, right? And maybe on the first day, maybe you were like, even though you don't have to admit it here as we're recording, but it's like
I,
you
I
might
actually,
you might have
no,
been
it's
like,
funny.
seriously, like, give me $1,000 for one and I'm good. Like, you know, or
I
whatever.
actually paid 35 grand for in vitro. So I paid for the headaches. And I looked at my wife and I was like, is there a return policy on this?
But you know, the thing is that like once you put your blood, sweat, and tears and lose sleep and like wrangle that account and have that mishire and fire that guy and train the new one and then everything's humming and you're just like, wow, I built this whole intangible thing that is just like generating $1 million of free cash flow every year and like out of not thin air just with my effort. There's no price on that is fair, right? It's just sort of like what are the odds?
What's your time in life worth is essentially what you're saying. Yeah. Back to my
Exactly.
time calendar or the triangle, right?
Yeah, it's like you're selling your life, you know? And that's why I come back to over and over and over in my head. It always just comes back to it's a lifestyle decision. It's like, do you want to walk away and hand the baton over? Do you want to keep it and, you know, engineer it into, you know, a Ryan Tansom money making machine? You know,
It's
or
a fair decision. I mean, yeah,
right?
yeah,
Or like,
yeah.
or how do you want to go? Or, you know, do you want to, and a lot of sellers, it's sort of like, and I do have a question for you regarding these, but like a lot of sellers, it's sort of like, they're not one trick ponies. It's just that like, they know what has to happen next. And usually there's been either some kind of movement in the market, some kind of like external change that's happening, or like you've hit a ceiling and there's like a next level that needs to happen, but it's like what got me here won't get me there. So often there's this sort of like, I don't know that I want to actually do the rebirth. I'd rather just sell what I've built, right? And like let someone else deal with the rebirth of what's next. And I
I
feel like
love how you worded that. I
well, I
really
feel like
do.
I say that over and over and over, and the thing is, you know, you and I know this, and sellers struggle, which is, you know, the best time to sell a company is when you're on the adolescent growth curve, not when you've actually eaten all the meat off the bone and it's all like, you know, plateaued, right?
Yeah, yeah, yeah. I mean, there's you very well said on many different levels there because like one is that what are they really worth? And I think that's where the dysfunction, even if like you do the 4 or 5 times the lower, I mean, it's like, yeah, there's like the deal structure. There has to be a way to hand off the asset and you have debt or equity and the world needs a return and that just is going to naturally impact the deal structure and the different types of debt and equity lenders or investors for that appetite of that risk and return. And I think like you summed up pretty well like how all of my clients were like half of them are our age and trying to like build their foundation through the 2030s and like build this like good foundation. I'm not going to call it the platform, but like the wealth machine. And then there's the other people where the life event is that rebirth is necessary at a time when they're in their 60s and they want to just be who they are and not go because like I mean I just in the last year I went through my own personal identity rebirth which is really hard and I've done that way too many times and it's painful emotionally. And so like whether that's rebirth is emotional or if it's actually an investment where like you have to burn all your cash to get the company to an investment at a different level of financial stability. It's an emotional and a financial rebirth that the timeline might not be satisfied.
Yeah, and like sometimes you're like in an industry that's in a growth curve, and then all of a sudden it flipped to like consolidation mode. That's like
Uh-huh.
a whole different skill set. Like that's a completely different situation.
Yeah,
You know,
well
and so
said.
I think that, you know, it's just like, and that's an extreme example. Like if there's technology moving in or, you know,
Well, back to your AI thing. I mean, like, there's a lot of different factors coming in now that like you have to be on your game on the operation side, and then also on the financial side. It's so like, what are you seeing from your acquisition lab and the different types of buyers? Like, what's the activity level? Where are they getting their money, and what kind of structures? Where are they? What kind of industries are they going after? What's the?
yeah, I mean, the thing is, you know, we're at the lab, we're industry agnostic, right? And that's by design, you know, so it's like, you know, if you want to buy, you know, a home services company or an e-com company or, you know, whatever it is, you know, we've got a guy doing roll up in CPA firms, yeah, whatever it is, like it doesn't, you know, but the thing is like probably I'm making up these numbers, but like 80 to 90% are just doing this sort of standard buy then build SBA loan like acquisition, right? And probably 80 to 90% of them are first time entrepreneurs or first time acquirers, right? It's interesting though because you get like we've got a guy who took 3 companies public and is in the lab to figure out how to play in this sandbox, or yeah, or we get like, maybe 10 to 20% of our members are it's like I'm a successful startup entrepreneur and I had this really big exit and now I filled the coffers and like there's no way I'm doing that startup bit again. Like I'm getting on buying my spot on base. So, I think that, there's a couple of I'll stretch and use the word independent sponsor activity going on, whereas the bulk of it is more SBA buyers. And how are they finding deals? Look, I think that the way I always think about it
Instead
is,
of like, not only how they finding deals, but what do they like? Like what's like the chatter of like what's appealing to people?
I mean, I think that I'm not going to give you a brilliant answer. What I would tell you is I think that
I disagree. I bet
the
you do.
number one thing that, first time buyers want is safety. They're scared to death they're going to make some kind of mistake. They want to find something that has some semblance of stability, right? And it's like no one can promise you that. It's just this sort of thing that's moving and you got to jump in and just start doing it, right? So, I think that what are they looking for? I mean,
No, but
gosh. Here, let me
I
give it
think
to you.
that
Do you remember have you ever seen like a traditional search fund like deal box? It's
I've
like
not. Is it like the Peyton Manning before he became Peyton Manning?
yeah, it's like I mean, I remember like I went to when was this? This was maybe 4 years ago and there was like all these M&A advisors in the middle market and they're like, "What's a searcher?" Right? So they like brought me in to teach these M&A advisors about, search funds and like what this whole thing was. So I did this session and like before I went on stage and they were like, they were all kind of like talking because it was sort of like emerging as a thing as a discussion topic. And I've seen these before too, and you're just like, you just kind of like, you like slap yourself on the forehead. You're like, whatever. And these brokers are like laughing, and they're just like, yeah, they gave me their terms, and it's their deal box, and it's just sort of like, honey, you will never get this. Like this will never get to you. Like I will buy that fucking company. Like yeah, it's
Yeah,
just
yeah. I would
it's
like to find Bitcoin when it was $1.
yeah, it's like I want to buy, a stable business that's low capital intensive, low labor intensive, recurring revenue, 1 to 3 million in EBITDA, no customer concentration, no key staff, and I'm gonna pay 2x for it. It's like that. It's like those home remodeling business, shows where they're like, oh, I just want to add 6 bedrooms and have like the downtown Manhattan style dining room and like my budget is like 85 grand and you're like sounds good and then they do it and you're like whatever. It'll be like Tennessee, something rural Tennessee or something and you're like dude whatever.
And then
Like
they go post it on X and tell
yeah,
everybody how
yeah,
easy it
yeah,
is.
yeah, because someone finds one, you know what I mean, and they're like dude I did it, or whatever. And like so
Oh,
every business that I bought, every single one had something that was totally wrong with it and that was deliberate.
mm-hmm.
That was deliberate. I just because the thing is like I had this one seller that I was
Delivered
working
on
with.
your end when
What?
you went
Yes, put it on
Okay.
my end. And in other words, you have to find something that's sort of like broken because like I don't know that I would buy a company after you, Ryan, worked with them. Because like once it's so dialed in, it's sort of like, well, okay, like now you're sort of banking on this machine continuing because the seller is extracting a lot of the information. A lot of first time buyers want that. A lot
Yeah,
of
and
private
I
equity
don't. It'd
buyers
be
want that.
interesting. One only I understand the direction of the comment, but like when I think about like some of the stuff that we put into place is like a formal strategic plan, like a 5-year forecast. So like it should be like who wants this cash flow and equity growth, who's willing to take that time to do it. And so there should be a lot of buyers for it, whether it's private equity or but it's to your point on the lower market, like kind of the nature of the deal, right, is like shit's broken and the reason that you're in this market is like is it because actually I should show you at some point. I've got 2 pictures of a house. It's like there's weeds growing through it and it's like 200 grand, and there's one that's 500 grand, it's remodeled, and it's like you're buying this so you can create this.
Correct.
Like that's the whole goddamn game.
Correct. And everyone's
okay.
for the new one, you know, like
yeah, for the old person's price. Yeah.
Yeah. And to be very clear, when I say I wouldn't buy a business after you work with it, I believe that the majority of the market would want, like you are
I'm tracking you.
For sellers, but you're also creating value for buyers. Like creating value in businesses before the transaction actually creates value for both parties. Don't get me wrong.
Yep, I'm tracking you.
But I had this one seller who just said it so well. He made the same mistake a lot of sellers do, which is I'm working with them as a broker. And by the way, like the whole reason I like wanted to get into brokerage was because I wanted like statistically significant access and experience to deals that were not mine. Right? Like where I wasn't the buyer or the seller or the investor or you know, or working on it in some way. So it was like, I was like, I want to see how this works sort of at scale and what I can learn from all these different experiences. Anyway, the point is this guy said he made the same mistake that a lot of sellers do, which is first time sellers, which is, you know, you get 3 offers and you just go with the one that's the highest. And it's like, great. But like what is on the paper, like what I've learned being inside 100 deals is that I'm not going to say that every time the highest offer is from the guy that's not going to close. It's just that I can look at them and be like, this deal is not going to go the way that you think. Like I recommend that one, you know, and they're like, yeah, but that deal is lower. And I'm like, well, yeah, but you know, you and I, Ryan, we know the numbers and like this deal, this person's offering $5 million on a $1 million EBITDA business, and they're not even asking the hard questions. Like,
I actually titled the podcast, Walker.
Yeah.
You tell me the price, I'll tell you the terms.
Right. Yeah. Right. But it's like it's one of these where this is what he said. He went with the wrong buyer. Okay. And then we went with and then whatever. It took 2 more times, and we were interviewing all these buyers and whatever, and it took like whatever. It took a while. It took like 9, 11 months maybe, and we finally got the deal done. It was, I don't know, 4.5 million or something. And the seller along the way goes, you know, it's like there's things that are wrong with me, and there's things that are wrong with my business, and there's things that are wrong with each and every one of these buyers that we're talking to. But at the end of the day, it's like we're trying to line up all of these things that are wrong to try to like find the right fit. And like once you find the right fit, the deal gets done. And I was like, that's genius. Right. I was like, you just said it so well. And like, I like, you know, so because
I agree with you. Yeah. Like, totally.
You feel that, you know, it's like this thing that you're trying to line up. And, you know, like,
well, and then the challenge in the lower market is like, how many people like enterprise value, equity value, net proceeds? How about working capital? I could have a 5-day session on working capital just in itself. And then we've got, okay, well, all the different deal structures of asset sale, stock sale, earnouts. I mean, like you could go on and on and on. So yet this person is going, I want to sell my job and I want to sell my business and I would like some money. And it's like, you're like the 2D cartoon in the 3D world. Have you ever seen that? I don't know if you're a Family Guy, but like there's this scene where there's an episode where Peter's like licking frogs and it's essentially like LSD or psilocybin. And there's this scene, Walker, and he's like, he like licks the frog, and next thing you know, there's like actual person, because it goes from cartoon to this actual person, and he's like, everything is so real. Oh, and like that's doing a deal. It's like, holy shit! Like I was living in cartoon world, and this is.
Oh, that's great. That's a good analogy. I like that a lot. That's really funny. Yeah, like I always say, it's like, I mean, go back to Buy Then Build, and if you read it, I think people read like, this is the most engaged life possible. And people like read that as like, it's the best life. And I'm like, it's just full court press, bro. Like you're just in. And the thing is like you then, I don't know what else to say. It's like, I don't remember the blue pill or whatever, but it's like you took
the red pill. Yep, the red pill.
You took the blue pill, and now you see the matrix. And like all of a sudden you understand everything's made up. Everything's made up, you know? So
yeah. Well, and I think it's as we wrap here, because I want to respect your time. This has been so fun, dude. I could do it for a long time. But like what is, I think the red pill is, because it is the red pill, right? I think it's the red pill is where you see the matrix.
Pill, like stop, send me back to the matrix.
I think that's blue. What? Well, we got a couple things we got to reconcile after this.
Yeah.
Okay, because I have a lot.
We'll link in the show notes. The matrix.
Fact check.
Or maybe yeah.
So when I think of what does the matrix mean to me, like that's the pill I'm trying to give people, because it's like I absolutely 100% believe that they know their craft and their operations. Sure, you're making it less chaotic with EOS or scaling up or something like that. Fine. But like you're still in the operations, but extracting out of that the zeros and ones is capital allocation, rates of return, and deal structures and valuations, which is what you and I are talking about, which is a way different thing. And like the goals of that, of the ownership structure of capital, needs to drive operations. That's one of my theses. But like the reality is staying in the matrix won't let you see that. And that's that whole, like, you're trying to jigsaw that thing together, and it's an inefficient market, man. And like it's I think what you're doing is pretty sweet. What are you looking forward to as you're looking at 2025?
Oh, I mean, I'm super excited to grow this private equity side. I'm working on a new book. It's way too early to talk about it, but it's just one of these where, yeah, I'm excited to actually. I've been a few things. One, I've been a very, very reluctant media person. I'm not a social media, I'll call Chelsea and I'll be like, I'm on the Facebook. How do I get to the group where I'm tagged? I feel like a boomer or something. Like but like I'm kind of doubling down on that, and I've got a couple of acquisitions that are teed up, and I'll leave it at that. I've got a couple acquisitions I'm teed up with. I'm writing a lot of content, and I'm super excited. I think for blowing up this private equity side and just bringing private opportunities to people that hopefully.
Yeah, fun, man. Well, we'll have to keep this going, because now that I'm on my own and focusing on content and stuff like that, I really think that we got two sides of the coin. And like I think that there are some fascinating ways from capital to buy, sell, like, I mean, or whatever there are. I mean, what you're doing is very interesting. And off the record, we'll have to talk about, I have avoided media besides just my podcast, but like I have had my assistant with like 2 months worth of social media posts that have been waiting for my approval for 2 months. And I'm like, I don't really care what anybody's doing outside. And so like, it's really hard.
Well, it's like I've always. This goes all the way back to the beginning of this episode, I guess, which is sort of like it's just kind of like I've always made money in my business and in my deals, and then all of a sudden, I feel like I spent 10 years sort of trying to get this mountain in focus, and then like I started walking up the mountain. I'm like, oh my god, like look at this mountain. I'm starting to share it. Like this is like Walker's Mountain. And then there's like 12 people just running past me like, hey, like, and they're all at the top now. And I'm like, oh, like I've been busy working,
No, I
and
was going to say, like, well, let's because I've watched the same thing for you and for me in interesting ways. Is like, but here going back to our 90 years in our meat suit, is like the only way to do it is to do it. And like these people that are helicoptering up to the top of the mountain can't explain what the fuck they did with the bear and the moose, and they took a poop on the side of the mountain, and like that's living the experience. So when you get to the top of the mountain, you can say, here's how I got there. It's like, oh, you didn't parachute in with a helicopter. And so like, I don't know, man, this is what I'm banking on, is that the lived experience that you have had of doing it and it being real and truthful, that it's hard. Here's how to do it. Here are the pros and cons. When you get to the top of the mountain, I feel like the fruit that you will be able to harvest from that journey of actually doing it will supersede the speed that everybody else got to the top of the mountain.
yeah, thanks for saying that, man. I also think that looking at acquisition entrepreneurship, and even I sat on Buy Then Build for 9 months after I wrote it and didn't publish it because I was like, someone's gonna read this in my business, and that's fucking stupid, right? You know what I mean? Like I was like, it's dangerous. But like the point is it's like the audience should be competent people, people that want to really take that risk and be entrepreneurs, people that want to jump in the fire pit and make their own luck. Like at the risk of sounding, like it's political, it's just sort of like, being an American, like let's just
Yeah.
go get it, go
Well,
get it.
Teddy Roosevelt in the arena, right? Like go in the arena,
Right,
beat some
in the
shit out of
arena.
people and get kicked. Yep.
So it's like that's the game. Like get in the game, man. Like for those that want to get in the game, like this was a whole capital market that no one understood or was talking about. Now it's a thing. Now it's, great. But not everyone should be buying a business.
Mhm.
Okay? But every single person that's an accredited investor should be invested in the private markets. Period.
Amen to that. Yep.
Period.
Amen to
And
that.
so
Yep.
that's why this whole next level, I'm like, you know what? Let's start talking. because
Yeah.
like, because I want to bring more awareness to, the sort of like passive returns that can be had.
Well, and this is where it'd be interesting, dude, because I think about like what's the hindrance to having more in that, because like that fuels the capital markets for the lower market then, which makes things more efficient, which is what we want. But what's interesting to me is like even PE firms that I know, Walker, like I know people that you and I both know. I'm like, I wouldn't put an effing dollar with you because I can't see any numbers. Like, what the hell's actually going on? And then I look at all the lower market, and it's like, so because my clients ask me, what should we do? How should we invest? And I'm like, show me your 3-statement model into the future. And they're like, I can't. And I'm like, so like, how am I supposed to do it? So like, it'll be interesting to see like what controls are necessary to actually attract that capital to like, or maybe do you just give money blindly, hoping people do it? I don't know. It's
No,
interesting.
no. I think like it's like, look, I know we're wrapped. I know we're like 15 minutes over.
It's too fun though.
I would love to share this one thing that I've been working on for the last 90 days. Is that
Yeah.
okay?
Yeah, absolutely.
It's now over. I mean, we are launching a new share class, but here's the thing: is that I had this challenge, which is um, growth in the private markets is not always in acquisition. It's also in adolescent growth and new projects. Okay, so there's this sort of discrepancy between like the message that I gave in buy then build and like buying a going concern and some of the investments that I make. Okay, let me give you a quick example. I was the first and largest check invested into the new 007 video game that is not out for another 12 months, 14 months. It's fully financed, okay, over $100 million in like all the rest of it, okay. But once I had these two guys had the Broccoli Family 007 license with MGM signed off and IO Interactive on board to build it, that's when I knew it was already done. It's just project financing. So it looks like a startup, but what's the built-in audience for a 007 video game? I mean, projections are like, we might sell $1 billion in the first quarter kind of a thing. So, will it work? Based on the budget to expected returns, probably, what I mean? But the point is like, so check it out. The second deal I took out is we're building a manufacturing company in Dallas. Okay. Building a manufacturing company, like, does not exist, going to exist. Um, so everyone in my group was like, wait, what? But check it. There is a company in Italy, okay, that's called Breton. And Breton has been the number one market share leader of engineered stone machines in the world. They have 92 to 95% global market share. Yeah, no, it's like, it's totally, Breton has supported the creation of 80 manufacturing facilities. We are building the 81st facility. Okay. So we said, well, like, who should be on the management team like Breton? Like, who do you think is your A player for, this? And they were like, well, this individual, David Barron, built the single largest Breton facility in the world, over 100 million in 36 months. We're like, great. So we got David. Kenan and Mehmet, also head of product, creator of Gen 4. Both of them have also built a $100 million factory in 36 months. So we got all three of them. We have three people that have built a $100 million factory in 36 months, supported by Breton, and they've done it before. And and Breton has supported 80 factories. But when I say, hey, we're building a factory here in Dallas, they're like, that looks like a startup. Don't you
Well, I
see?
mean, yeah, it's just project side.
Not. It's a project.
Yep.
So
Yep.
the point is that we're going to be, the only factory with the new Breton Gen 4. We're the only one that can buy it. Okay. We're the only one you can buy it from, period. We've got low silica in our engineered stone. No one else has that. No one else is going to have that at scale, I should say. Third is we've got domestic manufacturing. So the two big problems that the customers have is most of the product comes from overseas. So like when it shows up, there's big standard deviation on when exactly the ship date is, right? Or when the arrival date is. And second, when it shows up, when you have these big stone slabs that come over from, whatever, China, sometimes they like the colors don't match and they're supposed to go next to each other, like in the middle of a lobby of a hotel. And it's just like, well, I mean, here I am with this big piece of stone. It doesn't match the one next to it. It's like, you can't, so now what? You send it back? No, you try to talk to the customer into taking it because you're standing there, you're 12 days after you're supposed to be there. And the whole project is waiting on you to load this thing. So we solve all those problems to the point that, we had $11 million in purchase orders before I even went out. Okay. So, so it's one of these where I was an early investor and I got to experience the level of transparency that was happening with the sponsor, and I'd never seen it before. And so the goal is to self-list on the NASDAQ, and the lawyers are working on it. We should be public in about 23 months. And, our SPV owns loosely like a heavy 5% of the company. Yeah, which is totally cool. But it's one of these where it's like, it's the 81st factory. We're probably going to have, you know, like
It's not a startup. I mean, I'm tracking 100% here. Like,
exactly,
I mean, like, I mean, all I hear when I hear all of that is a well-articulated story about how you're going to generate future cash flows. That's all this is. And you're just like, every bit of data that you're giving is just reducing the risk because you're increasing the story and you're reducing the risk of generating those future cash flows.
it's the 81st factory of a $300 million manufacturing facility that's, stacked with the team, with the A team. And like, we're self-listing on the NASDAQ. It's not even like a hire Goldman and do the tour, and like none of that matters. We're engineering liquidity into the, like, I don't know. So the thing is it's something that for me is really easy to get bullish about, but I've learned a lot. And like, it's a lot easier to
And
raise.
don't you think, like, okay, then don't you think that your journey up the mountain, which is, let me know where I'm off track on this. Journey up the mountain, which is looking at deals, looking at value, looking at risk of future cash flows. That's what you've gotten really good at, right? It's like vetting out deals of future cash flows and understanding value and how to match value and return, right?
Yeah, and just business strategy and like, where is the risk lie and like who has the power and all of the, pieces. And it's just sort of like, so how do investors get their money back? Like, is it financeable? Like all of the pieces, So it's just one of these, like, it's this weird thing where, we're having to build an entire factory buying, tens of millions of dollars of equipment, basically with raised equity. But like, as soon as we start producing and we're post revenue, which by the way will be January, okay, we just flip it and we can take debt out on all the equipment that we've already bought.
Right. Yeah,
See
you
what I
just
mean?
refinance. Yeah. Yeah. Yeah.
Right. So like, yeah. So I'll leave it at that. But
How fun, man. You having
yeah,
fun?
I'm having so much fun. Like, it's just
Good
one
for
of
you,
these,
man.
like, and it's so that's an exciting project, and then it's like, so I'm doing that, but then I'm also, we're I think the word, what's the word? Like, we're the word that's coming to mind is gentrifying a neighborhood, which is like not the right word. It's like,
You're remodeling. Should we?
yeah, I mean, whatever, we're rejuvenating into an
There
economic
you go.
powerhouse, this whole like neighborhood, right? And
Okay.
so
Yeah. So you actually, yeah.
my A team owns 12 acres in this area, and we're just like, we're buying all of these things and like
Cool.
rehabbing all of them. So it's like everyone has seen that sort of like gentrification of like that neighborhood in their town. And it's like, we've got the whole neighborhood. This isn't like a one-off, like multifamily, whatever. It's like, no, it's a whole neighborhood.
Fascinating.
Right.
That's
Yeah. So
awesome.
it's just cool. So yeah, I'll leave it at that. Sorry, Ryan.
No, it's awesome, man. I can't tell you how much I appreciate you jumping on. This is a lot of fun. Yeah, man. People know where to buy you, buythenbuild.com. Any other place that you want them to?
.com, acquisitionlab.com, buildwealth.com in process.
Cool.
Thanks, Ryan.
Yeah, well, we'll be doing this again soon. Hope you enjoyed that conversation with Walker. A couple takeaways that I had that might be worth thinking about is, when I think about the fork in the road for the decision tree of like, hey, do you want to sell a business right now and you are currently the owner operator and you want to go find an acquisition entrepreneur? I think that does provide a unique set of buyers, because someone that wants to take that salary as part of their cash flow and have that job, but they also want the equity, they can use that cash flow to pay off the debt and then have that equity long term. That is potentially different from someone that just wants to own the company and have I'm going to put in massive quotes, passive investment, but more of a passive role while someone else that they hire is running the business. I think having that conversation and thinking about what that means to you, your equity valuation now, if you want to sell to an acquisition entrepreneur, and types of deal structures, what the company's really worth, and how that impacts your timeline. Because that having those expectations is very clear, I think, can help you make better decisions versus going through that entire next, how did Walker put it? But it's like, it's that next stage, right? Where you're going over and you're having to reinvest to potentially hire that president or put the infrastructure into place to then get the cash flow to a point where you actually have that multiple growth and you can afford more debt service on a buyout. I mean, those are just different timelines based on what your goals are. And I just think understanding the timeline, the impact on your cash flow and your equity is important for you to be able to make the decision. And I just think it's very fun being able to have conversations with Walker, because I hope what you get out of this is that we're both seeing lots of deals and lots of people and lots of situations, and it's not easily accessible to see what the norm is in all these different environments. And so hopefully, but listening to us, you can kind of get a better understanding of what's going on in the marketplace and how it might impact you in your situations and how you make decisions. So I appreciate everybody for tuning in. I hope you enjoyed the conversation with Walker, and I will see you next week.